The stock market got pretty beat up this last Friday. Is this the end of the rally, or are we just getting started? Perspective always helps, especially when we're all really tired and weary from all the horrible market action we've seen in the first half of this year. Let's take a look at what's going on as of the close this Friday, see if we can put some perspective on this. As of the close Friday, the Dow Jones Industrial Average closed down 0.43%. That's not too bad. The S&P 500 closed down 0.93%, almost 1%. That's getting a little worse. And the NASDAQ composite closed down 1.87%. That's not good at all. And then let's take a look at ARK Innovation. ARK Innovation closed down 5.54%. That's a disaster. Now, what does this remind you of? Okay, well, if we look back over all the period, the first half of this year, as the markets were dropping, this was the scenario. The Dow was performing better, S&P 500 a little worse, the NASDAQ much worse, and ARK Innovation absolutely getting tanked. So what do our metrics look like right now, and how do they look going into next week? Let's take a look. If we look at the market action on Friday, let's put some perspective around this, okay? So I'm just going to look at the S&P 500 and the NASDAQ here, but this is the S&P 500. Now, this is more than, obviously, Friday. This is a longer trend here. Each one of these bars is one day. So we're looking back to April here, and then to Friday here. And you can see the market bottomed out back here and has had a fairly nice rally going on. In fact, if you look at this red line, the downtrend line, we're still quite a bit above it. In fact, on Friday, the S&P 500 actually was above the previous day's close, but it closed down below the previous day's close. So we're still well above the trend line here. There's not any reason to panic yet. Let's take a look at the NASDAQ 100. Again, we're looking back to mid-April here to the present, and you can see again, same thing. The price action on Friday was actually a little bit above the previous day, but it closed substantially lower. So we've still got a nice trend, upward trend going on here, and no reason to panic yet. Now, this is a little bit of an eye chart here, but I'm bringing it up to show you what we're seeing with our proprietary metrics. I did some videos recently where I talked about these new indicators, and basically what you're looking at here, the black line is the price of the S&P 500 or the ETF SPY. The orange line is a bottom indicator, if you will. And what you need for a bottom indication is you need this orange line to be up here, preferably at 100% like it is here. And then you need this confirmation line, this dashed line, to also be up here near 100%, which happened right here back in the middle of June. So what this is telling me is this is a confirmation that we have a potential bottom here. Now, why didn't that happen back here? The orange line was at 100%, but this confirmation line was way down here at 60%. Even though this looked like a bottom, it wasn't a bottom. And in fact, that turned out to be the case here. This went up and then pulled back and went further down. Now, what do you need for this to actually be the bottom? Well, you need a confirmation. And the blue line is the confirmation line that tells you you've actually seen the bottom. Now, what do you need for this? Ideally, you'd like this blue line to be up here at 100%, just like the orange line was back here. And you'd like this confidence level to be up here near 100%, where in fact it is. Now, this line back here, the blue line, actually got up, I think, to 90%, if I remember the number right, which is close enough. It's not great, but it's close enough. And then you can see over here, it's well into the 94, 95% range, but the confidence level is falling off. So have we seen the bottom? This is kind of indicating we may very well have seen it. Like I said, I'd like it to be a little stronger, but I'll take it. And you can see the price action on the S&P 500 has had a nice upward trend here. By the way, it also looks like the second confirmation, the blue line here, is trying to make a comeback, and you can see the confidence level is rising as well. So we'll see what happens next week. Maybe this blue line goes up here and hits near 100% and stays there, and the confidence level stays high. We'll have to wait and see. Now, before we continue talking about equities, you really have to take into account what's going on in the Treasury market. Why? Well, because everybody's afraid of inflation. Inflation readings have been high with a CPI of 9.1% and a PPI of 11.3%. Those are really hot numbers, and they can scare the heck out of the equity markets. But what is going on in Treasuries? Now, if you remember from my previous videos, the Fed can control the rates at the short end of duration. So they can control very short duration rates. When they change the rates, those short duration rates change instantly. The Fed can't control the longer duration. So intermediate treasuries, 3 to 5 years out, all the way to long bonds, 20 years, 30 years, the Fed has no control over that. The markets control those rates. And what do we see happening here? Well, you can see the price of IEI. This is an ETF that has 3 to 5 year government treasuries in it. You can see the price bottomed out here, but it's had a very nice, although somewhat slowing rally here since the bottom. And this gray line is the buying pressure. The orange line is the selling pressure. And ideally, you want the buying pressure to be above the selling pressure, which it is here. So as these have gone up, the buying pressure is up here. Now it pulled back here a bit, sort of wandered back and forth with the selling pressure, but it's shooting up again. So this is a good sign for what the markets think about inflation. The markets are discounting inflation if this is telling the story I think it's telling. Let's take a look at long-term bonds. Let's take a look at 20-year treasuries. TLT is the ETF that averages 20 years of duration. And again, very nice rally here. And you can see the buying pressure above the selling pressure and staying above the selling pressure. This is a really good look for the long bonds. We can't really talk about all this technical analysis without including stochastics. And I really like what I see here. So for IEI, intermediate duration treasuries, you can see this blue line, percent K, is going up here. And for the stochastics to look good, this percent K has to be above this red and this orange line. So the red line is percent D, and the orange line is what's called a fur filter of percent D. It's a little more accurate representation of what's going on. And you can see here how the blue line hopped up above the percent Ds and has pretty much stayed there, bounced back up here. But what I like about this is that it's continuing higher. This is higher than this, which is higher than this. This looks really good. Same thing for the TLT stochastics. So we bottomed out here. The blue line, the percent K, moved above the percent Ds and has stayed there. And again, this is higher than this, which is higher than this. I like this because it's telling me the bond market is saying that inflation is over. Now let's look at the quintessential inflation hedge, gold. What's going on here? Well, you can see the black line, the price of gold is just getting trashed. And you can see that the selling pressure, the orange line, has been increasing over this entire 2-month period. Now it's pulled back here and it looks like they're going to cross. We'll have to see what happens here. Gold rallied the last couple of days. We'll see. We'll just have to see how this plays out. But right now, gold doesn't look so good. It looks a little promising here because these have crossed, but I would not be going long gold here. And if we look at the stochastics, a similar story. You can see that the percent K has just been falling. The percent D and fur filter of percent D have been falling. Now, given the couple-day rally we've had here, the blue line percent K has moved up above percent D, and there's a little rally in the price here, but it's too early to tell. We'll just have to wait and see. Now, how do the equity markets look? Now that we've talked about interest rates and gold, what are we seeing in the equity markets? Well, the S&P 500, same picture again. The black line is the price. You can see it bottomed out back here. We've had a very nice rally going on here. But in the case of the S&P 500, the selling pressure has stayed stubbornly above the buying pressure for the most part, although they crossed back here recently. So we'll see what happens. And if you remember from my previous videos, technology usually leads the way out. not the Dow or not the S&P 500. So what are we seeing in the NASDAQ 100 buying and selling pressure? A little bit of a different picture here. So again, bottoming out back here, but you can see that unlike the S&P 500, the buying pressure has, it's above here. Yeah, it kind of traded places here, but it's above here, again, trading places. It's above here again. So the buying pressure is a little stronger in technology, which is really what I like to see. Now, we can't talk about innovation without talking about the ARK Innovation ETF. Again, just like the NASDAQ 100, bottomed out here, has had a very nice rally going forward. But you can see the buying pressure, just like in the NASDAQ 100, above the selling pressure here, trading places again, kind of winding back and forth and ending up above the selling pressure. So this looks good going into next week, but no crystal ball. We'll have to wait and see what happens. Now, on the stochastics for all three of these, I think these look really good. The %K here, the blue line, moved up above %D and has continued moving higher. Now, this peak is certainly a little bit higher than this one. Ideally, I'd like to see this get above this one, but we have a ways to go. But I like the way this is going. For the NASDAQ 100, same thing. This is a really nice look here. And for the ARK Innovation Fund, a very nice look here. This peak is higher than this one, higher than this one, higher than that one, higher than that one, and higher than this one. So this looks really good. Let's hope this continues. On the cryptocurrency front, why do I talk about cryptocurrencies? Well, cryptocurrencies are not an inflation hedge. They're not a replacement for gold. That was all fantasy. Cryptocurrencies are innovative technology. And what are we seeing here? Well, the price dropped back here. There's been a sort of lackluster rally going on here. More recently, it's gotten a little better. But you can see the selling pressure peaked out big time back here. Buying pressure ramped up and actually has been increasing very nicely here. So cryptocurrencies look good going into this week. And on the stochastic side of things, how do they look? Well, the %K kind of bounced around here, going above and below %D, but recently has moved above %D very nicely. And this peak is, again, higher than this one, higher than this one, and higher than this one. So I'd like to see it get up above here, but this is a good start going into next week. So what has me worried about this market? Well, if you look at our sector aware model, what has me worried is the cash, intermediate treasuries, sort of long intermediate treasuries, IEF, and long treasuries are all stubbornly highly ranked. Now, this will take a while to unwind. What do I think is really going on here? I think equities have already started to recover, but remember, we had a really terrible bear market in bonds for the first half of this year. So bonds are recovering as well. This is kind of an unusual situation. Usually when cash and treasuries are ranked very highly, meaning a low number, ranked number 1, 2, and 4, this is not a good thing for the equity markets. But we're in an unusual situation where treasuries have just gotten trashed and equities have gotten trashed. That hasn't happened since the 1980s. So this is an unusual situation. Let's see how this plays out. What I do like here is that gold went from being in single digits way back here and before to now double digits. Consumer staples have gone higher here in terms of their rank. So they were ranked, in the 2s and 3s, and earlier than this, I think they were at some point ranked number 1. Now they're 6. So I like that. I like the fact that consumer discretionary, which was really at the bottom of the barrel back here in the 50s and 60s, has now moved up to 48. That's a good move. Equities, Dow Jones Industrial Average, which has been the best performing equity segment, is continuing to improve here. S&P 500 is improving a little bit, not enough for my taste. And the NASDAQ 100 still kind of toward the bottom. But again, these will take some time. This looks over a longer time frame, so it also takes longer for it to kind of change direction and come out of wherever it's going to go. Look, I know it's been really tough with the first 6 months of this year being just horrible in the equity markets and in the bond markets. There was nowhere to hide. If you had your money in bonds, you lost money. If you had your money in equities, you lost money. But things are not likely to keep going that way. You can't have safety sectors and risk sectors go down forever together. One of them has got to become a bright spot. Hopefully we've seen the worst of inflation. I think we have, but we'll have to wait till the numbers come out next month. And it looks like equities and bonds are responding accordingly. To be a good investor, you have to take the long view. So hunker down, wait and see how things play out. Don't freak out because Friday was a big down day. We'll have to see what this next week brings. And stay focused on the long term, many years from now. I'm Calvin Rose, this is Invest Smarter, and thank you for watching today. If you like this video, please hit the like, subscribe, and notification bell so you won't miss an upcoming episode of Invest Smarter. That's all for now. Hey, thank you for watching. If you enjoy these videos, there's several ways on Patreon for you to support the channel and access exclusive content, including special posts on the markets, educational materials about how to select investments and manage your portfolio, and at the investor level, you'll have full access to our natural selection stock rankings so you can evaluate individual stocks or market sectors that fit your investment style. Check out the link at the pinned comments below, and thank you for your support.